Something we do a lot here at Kingsbarn, it's a part of our core business model,
Yeah.
is DST structuring, right? So a Delaware
Right.
Statutory Trust obviously is a
Yeah.
legal entity formed under Delaware law to hold title to real estate assets. Um, this allows multiple investors to own fractional beneficial interests in the property without direct ownership.
Right.
While trusts have existed for centuries, which
Yeah.
I think is interesting, the modern DST is a product of a specific legislation, which is the Delaware Statutory Trust Act of 1988. The intent of this was Delaware sought to create a more flexible alternative to common law trusts. They wanted a business entity that offered the same liability protections as a corporation or LLC, but allowed for freedom of contract, meaning the trust agreement could be tailored specifically to the needs of the deal. The legal shield, obviously, around this was the act ensured that the trust's assets were protected from the personal creditors of the investors. And conversely, investors were protected to the trust liability, from the trust liabilities. Investors in return for their investment, essentially, into a DST, like an IPO for a building, right?
Yeah.
Receive a beneficial interest in which the IRS treats as like-kind property for purposes of a 1031 exchange, enabling potential deferral of capital gains. Relating this to what we do at Kingsbarn, right, which the DST is typically managed by a sponsor.
Yeah.
We would be the sponsor who handles property acquisition, financing, management, and eventual sale, while investors remain completely passive. As far as the ownership structure, investors own shares of the trust, not the property itself, creating legal separation between the trust and its beneficiaries. In addition to that, the sponsor also performs management. The DST sponsor oversees leasing, tenant relations, capital improvements, and cash flow distribution. Many DSTs usually use like a master lease to structure this, so that way it doesn't violate the 7 deadly sins. Obviously,
Yeah.
I think it's the seven deadly sins, if I'm not mistaken, of a DST. However, these are generally illiquid, typically holding periods for 5 to 7 years. But there's an actual interesting aspect to this where there's a secondary market being created. Have you heard of this?
Yes.
Okay, so it's one of those areas, and you'll be able to. It's great because you'll be able to talk on this. Is like it's one of those concepts where, it's finance. It's what's the word? It's essentially, it's financial engineering at its finest.
Oh, for sure.
Because you have a marketplace already for the DSTs that obviously hasn't been around for very long.
Yeah.
And it's still fairly new. It's still a fairly, growing segment. But investors took it upon themselves, essentially to fuel the secondary market, albeit it's slim, and it's probably I think it's only about 200 to 300 million, in total, size, which is very, very small. And it's probably very, the spreads on that, I can imagine, are pretty crazy, the bid to ask.
For sure.
However, there is a market being created, which I think is pretty fascinating, typically because these holding periods are 5 to 7 years.
Yeah.
Obviously, investors should be prepared to hold their investment for that full term. However, there is a secondary market that's being created. And I do think the bigger that the DST market grows, and I believe it's 10 to 11 billion, if I'm not mistaken now, or expected to grow to that level, the bigger that grows, the larger the secondary market in turn grows, creating this brand new aspect
for sure
of a completely separate marketplace where people are able to buy and sell DSTs. I mean, this is literally like it feels like we're in the midst of a new, market creation.
For sure. And it's interesting that you brought that up, because when I was, I've done some research on the secondaries market. Obviously, it's an industry for sure. It's interesting. I'll say that. It's interesting because, you get to see what sentiment is realistically, right? It's like, if you want to get out of a position, you're selling to somebody else who wants into the position. I'm more interested in who wants into that position, at that either discounted figure or whatever, and why is it, right? And it's interesting because in my research I found that banks are actually increasing that secondaries interest, right? Where they're interested in holding secondaries or having secondary interests, or or advising on the sale of secondary interests. But there's an interest from banks into the secondaries market as a whole. Right. And so I think that's a really interesting thing to see. I think it's interesting to see how it'll grow in the next couple of years, especially with the DST structure. I'm I'm really interested
Yeah.
in the DSCs and how we're going to be able to see the growth of the
Yeah.
DST market specifically in the next couple of
Mm.
years, especially with the private credit things going on. I
Sure.
think, or with the private credit market right now, I
Right.
think
Yeah.
it's going to be extremely interesting to watch.